The annual gathering of heads of state and finance officials taking place this year in Abidjan is one of the biggest finance meetings on the continent. The key event in this year's meeting will be the election of the successor to the current group president, Dr. Akinwumi Adesina. Prior to the vote, African company managers and ministers shared their thoughts on the outgoing president's 2 terms in office.
We would like to express our gratitude to all those who have dedicated 8 years to our organization. They made every effort to assist Africa in taking a new direction towards construction and development. In this regard, we have high expectations of the new president and his team. It is essential that we enhance the AfDB's internal governance. Most importantly, we must concentrate on the key economic sectors that will make Africa a driving force of global economic growth. This outcome is entirely in line with our expectations.
What I think President Adesina has done, I think the high fives, the big ones around empower Africa, industrialize Africa, integrate Africa, include Africa, have been amazing for these last 5 years, because they have put Africa squarely on the map, especially integration as a key pillar for developing Africa.
The youth team need to continue what the last president did before, because he really supported agripreneur. And then, as we know, agripreneur is the future of Africa. So I always encourage this new team to continue, if possible, to do better than the last president.
The second day of the annual meetings of the African Development Bank will be marked by the launch of the report on economic prospects in Africa for the year 2025. The agenda includes panels, a board of governors, training workshops, and many other activities. Desiree Canon, CGTN, Abidjan, Côte d'Ivoire.
All right, then let's dig a little deeper into what we can expect at this year's annual meetings. Serah Makka is the Executive Director covering operations here in Africa at the One campaign. She's joining us from Abidjan, where the African Development Bank's annual meetings are taking place. Serah, good to have you on the program. So let's start with that question around the succession, right, of Akinwumi Adesina. Walk us through the profiles of the 5 candidates who are trying to replace him as a head of the AfDB. What are the pros and cons of the skill sets they're bringing to the table?
Sure. I think, first and foremost, thank you for having me on this show. I think it's really important what the stakes are for Africa at this point. So the last time we were here was 2015. The world was very different 10 years ago. And so what we need this time is a strategic vision, financial acumen, because I think where Africa is today in 2025 is very different from where it was. And we need a deeper commitment to a continental, sustainable, and sovereign development. So these 5 candidates, who do we have? We have Amadou Hott, who was a former minister for economic planning and affairs in Senegal. He's also held quite a variety of roles across the continent as the AU envoy for infrastructure, the FDB envoy, for infrastructure. We also have on here Sam Mayambo, and he works with the World Bank and has also had a variety of roles at the World Bank, both as the chief of staff to the president. Has worked closely with Ajay Banga. We have with us as well Sidi Ta, and Sidi Ta was also a Minister of Economic Affairs in Mauritania, and he's the outgoing Director General of the Arab Development Bank. We've got Abbas Mahamat Toli, who was again a minister in Chad for finance, a former minister of finance, and is currently also the former central bank governor, Central African States Bank president, excuse me. And last but certainly not the least, we've got Swazi Chabalala, an insider this time, worked in the African Development Bank as a senior vice president, and has had over 30 years of experience in finance, including roles in private and public sector. I think what's important to note for these 5 candidates is 3 of them have worked internally within Africa as ministers of economic affairs, finance, international corporations. So we've got that in Amadou Hott, we've got that in Sidi Ta, we've got that in Abbas Toli. Two of them have worked on multilateral development banks. So Sam Mayambo has worked in the World Bank, and Swati Shabalala has worked in the Africa Development Bank. It's worth noting we need both kinds of experiences. We need a president that has worked both locally within an African country, rising it up and deepening its financial spectrum. And we need candidates that understand the multilateral development space, because more than ever right now, geopolitics and navigating Africa's fate across the Committee of Nations is really important. So I think all five of them have been really important to the landscape.
And on his watch, Adesina nearly tripled the bank's authorized capital. It's well over $200 billion. It's looking at the last set of financial results for 2023. His successor, though, to go to the point that you made earlier, right, when Adesina checked in 2015, very, very different macroeconomic environments around the world. Capital was a lot cheaper to raise, but now his successor is going to have to find it a little more challenging to raise more concessional capital, not just because the era of cheap debt is over, but also because a lot of the countries that do have that capital are more focused on turning inwards and investing in their own countries.
You know, the jury is still out. Yes, on the face of it, for sure, the global financial conditions have changed. But I think that we shouldn't be too quick to conclude that it might be significantly harder. Yes, indeed, traditional concessional resources are constrained, with ODA being cut, the ADF replenishment, which is really important for this year. We'll have to look for less traditional donors. Yes, we know that there's a tightening of monetary policy across the world. And we saw what happened in 2022 when the US increases interest rates. African countries saw currency depreciation. We saw it was harder for us to borrow money in the capital markets. And yes, we do know that 22 countries on the continent of Africa are at risk of debt distress, including other countries around the world that are also facing some fiscal challenges. However, we also know that we have some leverage on the continent. So we have critical green minerals. We need to add value. And what that helps us do is we can have more leverage to negotiate better positioning for the continent if we act as one. We also know that there are less traditional donors. Perhaps we've looked on Europe and North America in the past. It might be time to look at Asia and Middle East, because I think this less traditional donors could be a place of increasing innovative finance for the continent.
So a bit like helping, like the sort of deal that Egypt, for example, struck with a credit guarantee from the AfDB to raise panda bonds in the Chinese market.
Exactly, exactly. Africa, however, needs to be on the side of negotiation to make sure that we have the negotiation block stacked in our favor. I also think that this time will call for innovative financing. Gone are the days when perhaps there's cheap capital out in the market and we can just go out and negotiate and get some capital. Now we need to innovate. We need blended finance. We need the private sector, domestic and international private sector. Now, underscore domestic, because I think we sit on assets like pension funds that have not been utilized for development, and there's an opportunity there. We need to do more to increase coverage of things like insurance within the continent of Africa, so populations pay less out of pocket. So I still think there's some depth that we have not explored, and the next president will have to explore these areas for us to be able to increase that more authorized capital. But I don't think we should easily conclude that it will be worse off this time. I will concede that the terrain has changed, but I think there are opportunities for us to take advantage of.
One last question for you, because unlike 2015, again, when Adesina came into office, right, more than half of the economies on the continent now either are in debt distress or they're at high risk of debt distress. Should fixing that be the key priority for the next AfDB president? Because Adesina had this focus on, these 5 issues, right, around healthcare, integration across the continent, energy, agriculture. I'm forgetting what the 5th one was. But, he had this high focus on the high 5. But given the macroeconomic environment for these 54 member states, should the priority here be fixing the debt problems that could potentially undo a lot of the gains that we've had in the last decade?
I think that is exactly the priorities, because fixing the debt problem is not just about fixing how much we borrow and how much we have to pay back. It means fixing our path and our trajectory for development. Currently, countries are trading off paying debt And instead of paying for salaries of teachers, of health workers, they're paying debt so they don't get into default. So it's not just a challenge on the balance sheet and the books, but it's really about our development trajectory. And I think the cost of capital and the cost of debt has to be #1 priority. We've seen that Africa in some ways are biased with perception, and somehow that risk perception leads to us being we are the region in the world with the highest cost of borrowing in the world. We must change that, and I do believe that must be the focus of the African Development Bank Presidents.
But how exactly would that work? Because I know AfDB staff usually say, look, we're not in the business of refinancing debt, right? So if refinancing is off the table, what can they do to help deal with that brewing debt crisis on the continent?
Well, AfDB's role within countries can be underestimated. I think there's an encouragement for countries to really sweat their assets. We have revenue, we have the ability to have streams of revenue that sovereigns are not yet adding value to ensure that they have a long-term trajectory of bringing in more resources. So that's one thing that AfDB can do. Secondly, there's some instruments like guarantees. AfDB has the AAA rating, which is really important to help countries who don't have that rating leverage their rating to get more resources. So there's room for AfDB to either step in as guarantees for countries alongside guiding them so that we plug the leakages, we plug the areas where resources, whether it's in mispriced trade receipts. I mean, Africa as a continent has $8.9 billion we lose to illicit financial flows every single year. And it's not just the sort of the run-of-the-mill corruption. It's many things that are incorporated in that. How can we plug those holes? And how can we then sweat the assets that we have, add more value to our agricultural products, add more value to our critical green minerals, so that we have more revenue as a continent, and then can leverage some of the innovative finance that AfDB can do. I think there's a lot of room and there's a lot of opportunity for that.